And I think that's what they're doing. And I think this is going to end very badly for the West. And if you do not own gold and silver, you're not going to get any when this thing breaks, because it's going to move little by little by little, and bang all at once. It's going to be the biggest bang that you could ever imagine. And you can see this by this coiled spring that is so massively rehypothecated and leveraged. I think it's a once in a generation opportunity that I hope people are listening to, because I've never seen it.
Think you can wait to buy gold and silver? Think again. In his latest video, Andy Schectman sounds the alarm on an impending market shakeup that could leave precious metals scarcer than a unicorn at a petting zoo. He predicts a slow buildup followed by a massive bang that'll catch everyone off guard. Are you ready for the biggest financial surprise of a generation? Let's dive in and find out why you need to act now before it's too late. So, don't go anywhere. Keep watching important and informative content on our channel. Let's listen to Andy Schectman again.
So, even the Financial Times recently just pointed out that the global flows of metal, the real level of buying from west to east is, especially China and Russia, has been way understated from what is reported. This was just in an article that came out in the Financial Times. You just had a guy, an analyst from Bank of Montreal, say that China is massively understating what they're accumulating. But this is a trend that's been going on for a while. Why tell your enemy what it is that you're accumulating? This is misdirection. They're not going to tell us. But the analysts, the Financial Times and Bank of Montreal have at least had the courage to say those numbers that we are seeing are not right. They're massively understated. Okay. So what the LBMA and the COMEX have in common is that they trade spot gold and silver contracts. Let's call them promissory notices. Let's call them promises to deliver. But the point is that when these exchanges were set up, no one really ever stood for delivery, right? And these countries that are doing so right now did not have the wherewithal or the sophistication to do so. On COMEX, it's typically 100-ounce gold bars. They do have the mini contract, the kilo bars, which we have seen been flowing to China. In London, it's the 400-ounce gold good delivery bar. They both trade the 1,000-ounce bars. There was an article by Forbes magazine recently that said there is now vastly more paper gold and silver, physical, or at least gold anyway. They called it between 200 and 300 trillion in paper gold compared to 11 trillion in physical. So when you talk about this rehypothecation, when you talk about the ability to control the paper price by issuing more and more contracts, this is how they've played the game forever. They have rehypothecated the heck out of the markets, controlling the price, which is really the kryptonite to the Western system. These spot contracts, as they're called, represent well over 90% of the trading in the London Metals Exchange. In other words, the bullion banks are making promissory notices. Well, if you want it, fine, but no one ever stands for delivery. They keep issuing it. They overwhelm the price. But if they were ever called on the carpet, what would happen? We just mentioned that the silver in the COMEX market is 1,600+% rehypothecated. What would happen if everyone stood for delivery? Now, I want to put some of these trading volumes in perspective. The LBMA, the London Bullion Metals Association, publishes a monthly report on trading volume. So we said that the silver in the LBMA is roughly 800 million ounces, of which 500 million belongs to the ETFs. That leaves 300 million ounces left. Yet they trade roughly 292 million ounces of silver per day. 292 million ounces of silver per day. And 20 million ounces of gold are traded per day on the LBMA. But in a survey that was done between the bullion banks and the LBMA in 2011, they admitted that actually those numbers are about 10 times understated. And the way that they explained it was that if a bullion bank were to sell 20 contracts and buy 10 contracts, the net result would only be 10 contracts, and they would only count 10 contracts instead of 30. So what they're basically saying is it's about 10 times understated. And that would mean, just using math, that it's actually, instead of 20 million ounces of gold, it's 200 million ounces of gold. And compare this to the Shanghai Metals Exchange, where you have to deposit a bar first in order to trade it. Their daily volume is only 300,000 ounces, yet the London Metals Exchange is doing 200 million ounces per day. That would also mean that the London Metals Exchange is doing over 2.9 billion, with a B, ounces of silver per day, right? In other words, they're trading over 3.5 times the amount of yearly production every single day in silver. This is how they have, in concert with the COMEX, held the price down. The West has ruled the metals market forever by using this rehypothecation, this leverage. By permitting more paper claims to be created on the same amount of gold and silver allows the management of the price. It's not going to rise if you can way overwhelm the supply and drive it down, because in concert, the Western central banks had all the money, right? So I want people to think about this for a moment. Why is it that the commercial banks are showing up at Shanghai, and at the same time they're showing up, the Shanghai silver stocks are bleeding down to their lowest level in 4 years? So I guess I would say, in conclusion, you cannot export gold out of China without first depositing the bar in Shanghai. We talked about that. We understand that. But you can export silver. And all of a sudden, these big bullion banks are showing up naked short, mind you, massively naked short, to the Shanghai Exchange for 4 straight months or 4 straight weeks, begging them, it looks like, for help. Let's not forget that oil markets, by the way, Dunning, are 12 to 15 times the size of global gold markets. So if indeed all of these countries are buying oil, using local currencies and settling out the differences instead of treasuries into gold, what does that really say for gold's potential? What does it really say for silver's potential in this massive shortage that we see of available silver? And why are the 4 big bullion banks, that are probably the 4 that are shorting it the most on COMEX, why are they going to the Shanghai Metals Exchange 1 week after another? In essence, it seems they're begging for help in getting out of these short positions. And since they've gone there, the Shanghai silver stockpiles are falling like a stone. Could it be they're working out a deal? We'll give you gold, we'll give you whatever you want, we need your silver, or we're going to blow up. And I think that should not be understated. And they're not making it easy on them, mind you, with $36 an ounce silver closed today in Shanghai. What are we at right now in silver? Right now in silver here in the West, we are at 31.78. They're approaching $4.25 an ounce higher. When we started talking about the spread in Shanghai, it was $2, then $3, now $4, $4.25. How much higher does silver have to go before people understand that this is maybe the opportunity of a generation? And I guess I would just simply say that I hope this is starting to make sense. This is a trend that the West perhaps can no longer be in control of. There is not enough physical supply to play this game. You can only manipulate a market over an extended period of time by pushing it in the direction that it is going. Now, I'll leave and take any comments you have, and thank you for letting me ramble. I love you. The last thing I'll simply say is this. The total money supply, M2, in the United States, is up 14 times since 1980, 14 times, yet silver is 60% of its high. Do you see a problem in any of this? This is all manipulation, and it's ending right here in front of us. You can see it ending. I hope what I've said has made some coherent sense. To me, what I'm seeing is a picture of desperation and last stages of this game. And it seems to me that the BRICS in particular realized the way to beat us, literally, is through the silver market and by extension, the gold market. And I think that's what they're doing. And I think this is going to end. And I think that's what they're doing. And I think this is going to end very badly for the West. And if you do not own gold and silver, you're not going to get any when this thing breaks, because it's going to move the little by little by little, then the bang all at once. It's going to be the biggest bang that you could ever imagine. And you can see this by this coiled spring that is so massively rehypothecated and leveraged. And when it breaks, when there is no silver to deliver on these naked short positions, when the ETFs break, when all of this break, and it seems like it's getting to the point of breaking, I think it's a once in a generation opportunity that I hope people are listening to, because I've never seen an asset class like silver that offers the upside potential with the lack of downside risk ever. And I've never sold on your show ever. I've never talked about people buying silver for upside potential, but I think it's as good as any commodity, any asset, any investment on the planet. I'll shut up and listen to what you have to say, but I hope I've made some sense.
Thanks for tuning in to Andy Schectman's eye-opening take on the future of gold and silver. If you found this information as crucial as we did, don't wait. Like, share, and subscribe for more expert insights and market forecasts. Remember, the window to secure your financial safety net is closing fast. Stay informed, stay prepared, and be ready for the unexpected. Until next time, keep your investments golden.